Hey everybody, welcome to your daily update for BTC and SOL. Not as many closes today, but there are some pretty important ones and some levels that we really want to see it retrace back above before daily close. Looking at the liquidity, looking at actually looking at the 1 day for BTC, you would not think we've had that dump. We hit the 112,800 level. We bounced. We went a bit lower than that. The levels went crazy. The exchanges and TradingView just couldn't keep up. There's people talking about orders not getting filled and big liquidation wicks, etc. And it was, I think, the third biggest or one of only three liquidation events of that size that's ever happened. So it's pretty big. Now, looking at SOL, it does look like there has been a bit of a liquidity grab, but also you can see that longs have come back in and started to open up, etc. There's still really a inefficient amount of liquidity on the 1 day to actually push up any higher. And so the risk here, of course, is that if if you don't get a lot of shorts opening between this area like 218 and 224, then really it's just more efficient to go down, make it look bad, and then the shorts will continue to open up. So that means you could see a secondary dip. Certainly, there's a couple of structural things that have happened on the 1 day, like we bounced off the backside of a range. We didn't actually bounce off the front side hold. So backside bounces are usually not sustainable. Typically what happens is you go up for a bit, then you reverse down and you hit the front side. The front side would be down here. It's sort of around the 109s, 105s, depending on the time frame that you look at. So it sort of looks to me like we might see a secondary dip. And the only way to avoid that really would be if we get a pretty decent retracement up above certain key levels before daily close. So looking at the 7 day, so the 7 day does look like we've had a sweep, so that just goes to show that a lot of those older leverage positions have been taken. But when we compare that to the 1 day, the 1 day just means people are buying the dip. And unfortunately, if everyone buys the dip, there'll probably be a dip of the dip, so that's kind of something to keep in mind. The levels, that we see here, same really, 111, sorry, 211 on SOL, and if we were to drop down, it's still sort of that, 110 is that next sort of step in the 7 day. But it does show that there's more to take to the upside. So that means BTC, you might see a bit of a run up to sort of like the 113, 114, and that's just what we're sort of expecting anyway, based on the bounce of where we've hit. Unfortunately, again, there's just that big gap on SOL. So either it gets pulled up by BTC going up and then manages to get into that sort of 224 to 230 area and grab that big block of liquidity just because BTC moves up, or it just doesn't. And we're still in a rejection on the SOLBTC chart on a monthly scale. So it's entirely possible that, you do not see a push up in SOL. You might even get a push up in BTC. You might get no movement in SOL. That actually helps correct the SOLBTC chart. And then after that, they can come back into sync, and then maybe you then get a more downwards move on BTC and less downwards move on SOL. But at the moment, they're really out of sync. So SOL is very weak compared to BTC. So if we look at the 30 day does not look like there's been a liquidation sweep, which, it's not really good in the scheme of things, because you can see that cluster. They're all basically that same level. If we go back up to 114, after that, yeah, we could dump to 106. Like it's definitely just there in the chart, and there's still more liquidity to take to the downside. So really, the key thing is getting back up over that 224, 225 area. It's a break level that's been hard closed on 4-hour and I think 8-hour timeframes. So if it doesn't get back up and over that, then it just can't take this upper liquidity, and all you're going to get is a rejection off that break level and more downside. So looking at the complete chaos that happened. So Scroll back a little bit. You can see they just took an absolute nosedive. So, I mean, the charts looked really bad, and they have looked really bad for several days now. Was not quite expecting the nosedive to be so big and so fast like that, but one of the guys in the Discord brought up a good point today, and that's that they kind of had to move fast because there was no way to trap that liquidity. They were all profitable positions that could have been closed if people saw it coming. And so, yeah, really the only way was to go down. And on Sol, the dump was just phenomenal. But I'll show you on the weekly chart before this is over how they did that, because it was very, very, very well orchestrated, with one hourly candle in exactly the right position to reject off what I call the Trump trend, which has been basically the key trend since the beginning of the bull run. But we'll show you that in a sec. As for could it go up? Yep, got the liquidity to the upside. Could it go down? Yep, got the liquidity to the downside. My gut feeling just at this stage, based on all the levels and what's closing today, is that much like we've been saying yesterday and the day before, if we don't close higher today, we probably will have another drop to the downside. And so let's have a look at these levels. Okay, so SOL BTC chart is very weak. It's still in that monthly rejection, which isn't really going to get resolved unless it actually gets down to sort of that 0.0018 072 area, which would mean coming back to the range trend on the monthly. That's about the first point. And it may even carry over into next month at this stage, because they might, and that would be bullish if they do that. They might want to hard close the candle up, and by hard closing the candle up, they've hard closed the range that's down here at the 17770 area. Then they could come to the retest and bounce. So you may have another 9 days of this yet. So looking back to the 1 day, the key thing today is that you want to see it get back up over these break levels. So it would be, let's just call it very bearish if it closes under the 19524 level, because that's basically just getting back under the range, and it could just reject off the back of that and continue to dump, and that would just be ultimate weakness. It doesn't mean SOL goes to zero, but it means maybe Bitcoin pumps and SOL stays flat or doesn't even move. Those are the kind of things that can fix this chart and bring it back into sync. Of course, if it creeps back up over the trend, then that's medium. If it gets back up into the topside range, that's actually quite bullish, and then you could bounce off the bottom of the range. So basically the level of bearishness to bullishness on this really depends on where it closes, either between 19524 being really bearish, or if it gets back up into that 20015 area, that would be really bullish. There's an untested hold level sitting up here on the daily, which is sitting at 20625. That is the target for a trend bounce, and that's really where the price should have gone from the moment it hit this trend here at about 19884. But like I say, dailies can be just pushed down by the fact you're in a monthly rejection. You might have to go through a whole bunch of ranging before you can even come back up there. So that's how that looks. And just a brief look at the weekly. So this is what happened yesterday. We created an uptrend. We opened on the wrong side of it. We dumped. So this basically means nothing now for the next 6 days. It could keep going down because it hasn't hard closed any of these weekly ranges yet, so it can come all the way down into that area, which you'd almost expect it to do for the monthly. You'd notice that 1770, which is the hard closed weekly level, which hasn't had a retest yet, that's confluent with the monthly targets. So I think there's going to be more weakness on SOL, but just like a lot of the times that this has happened in the past, it can go down here for 6 days and then it can pull back up again before the candle is done and get back up into this top range, and then it can travel off to the moon. So, it's not to say we're in a bear market, but it's not bullish. This isn't bullish price action. So, looking at the safety assets, what you want to see is if there's going to be any kind of little pump in the alts, you really want to see this closing down below what's that level? 65 point. Where are we? Yeah, 65.09. You want to see it closing below there. If it closes above there, it's probably going to pump. We've tested this hold level to the top side here at 65.46. So these are all levels we sort of were expecting it to come back to. The next break level to the upside is up here at 65.92. So we don't really want to see it close over this one-day origin. If it does that at 65.09, based on the fact it is an origin level, it could have a very quick move to that next break level. And that would mean a very fast dump, second stage dump really in the altcoins. So it would be bullish for the altcoins temporarily, and I say temporarily because we're still breaking all these levels to the upside and we're not breaking them to the downside. So this is bearish, and if it wanted to flip bullish, it needs to close under these levels and then come down and start to hit these bottom levels, which are also not hard close. So get rid of that one now because that's gone. But it all pretty much started with this 4-hour origin level that was inside the daily here. It closed over that and then it just shot up, and that's basically how it works. And now it's trying to close over a 1 day and then it can shoot up again. So yeah, I would short version is, if this closes down, you might get a bit of a relief rally. If it closes up, you're going to see another really painful dump. It could happen quite fast based on the structure, and it would mean that it would be more of an alt dump than a BTC dump, which isn't it's not really bullish, unfortunately. So if we look at the weekly, so the weekly is creating a bottom side origin level. Really, you want the week to close down. If the week doesn't close down, then this 63.76 level could become a key reversal level for this to target these higher these upper ranges. So even if it was to push through to these upper ranges in that 66 area, 66.18 to 66.89, it's almost better it does it now, retraces back down and then dumps down, because if it actually closes in this formation, you basically have a origin level creation on a weekly time scale, which favors non-risk assets. So that's pretty bad. And then if it was to push down into here, I would probably just consider getting out of alts, because if it touches that, it could easily shoot up to new highs and reverse the entire downtrend. If it closes under it, however, that's a different story, because what this level becomes is it becomes a polarized level. So closing under this on the weekly then means that all these bottom trends are they're stuffed. It'll just plow through them, and that's great, as far as that final push for alt season. So we're getting some pretty key polarized levels here that are either going to be make or break. And on the monthly is really just looking to retrace back up to the unbroken trend at the top there. So all of this actually says, we're probably going to have not a quick reversal, unfortunately. So let's see if we can find something that's a bit more bullish. So looking at the totals, getting back up inside the trend would be good start. But really getting back up inside this break level here. So we need to be getting up over the 353.43 or the 354.8 levels, and we've come from quite a way up. So it would be bullish if we did manage to get back up above this interior downtrend, which would mean 357.46 for the close of the day. But yeah, we'd need a pretty decent move just to come out of nowhere in the next 3 hours for that to happen. Could happen. We're between markets, so it's possible. But yeah, I wouldn't be mortgaging the house on it. Okay, looking at it from the other direction. So this isn't too bad. We're going to close hopefully above the 356 break level on the daily there. We haven't tested the bottom daily hold down here at 352, but we don't really have to. If we can stay up inside here, then we should get a retracement back to the trend, and that might get us, depends really on how long it takes. If it goes sideways for too long, then it doesn't really have to go up. But if it goes up relatively quickly, it could be maybe a move back to 3.65. But again, this is not actually bullish really unless it gets back up inside that 3.67 break level, and or at least above that 3.66 trend. So of course, if it was to come down before the end of the day and close under the 3.56 level, then that's really bearish, and then we're going to dump pretty much to this 352 level, and that's going to be our next point of potential recovery. If it actually gets below that 3.54 trend, then it's going to be nasty. So really that's what we're watching on the total market cap. So looking at that from a weekly perspective, the weekly has already basically been in a range trend rejection, so it's broken outside of the wedge. Really, it's just got to it's got 6 days and 3 hours to go. This either becomes a deviation. I think I said this yesterday actually. This either becomes a deviation and then it breaks out the top and heads up, or it doesn't and it just keeps going down and it hits these break levels at 3.41 and lower. I'm not as bearish just on this time frame, just looking at the total market cap like this, because we haven't actually hit. There's 2 break levels in here that are untouched to the downside, 3.4 and 3.41. Now, if we don't hit those, then this is more of a deviation, and it can spend this amount of time. It can spend the entire of the next 6 days below that trend. It doesn't break the trend, so yeah, I'm not as bearish when it comes to looking at that. So BTC. So BTC came down and hit the hold level. It's retracing back up to the 1618. So it's kind of doing what it's meant to be doing. We want to see it close back up inside this trend. It would be ideal if it closed up a little bit further, because then it wouldn't be on it. On it still means you could just continue to dump for another day and then go back up. But it is still closing below some pretty key levels unless it gets back up into this range trend. Excuse me. Now we've seen this before. We've seen in the last 2 hours and 55 excuse me, in the last 2 hours and 55 minutes of a day, things get back up inside range trends. So if it does close back up into that 114 area before the end of the day, that's good. It could have a bounce off the range trend, and then it could head up to the hold level here at 115.578. So I wouldn't write this off just yet. It just needs some buying pressure to come in. If it closes between the break level though, or below the break level, then you'll end up with some resistance here at this 114.3 area. So it's it's got the ability to reverse and become bullish and target the hold level and then come back and bounce off the bottom of the range and, to go through the whole process of reversal. It's got the ability to do it from here. It just needs to do it in the next 3 hours. Hence if we don't go up, we're probably going to go down thing again. Looking at the 5-day close. So it is inside this 5-day range from August, basically. So we have an origin level on that range at 119.811. So and we're going to get a hold level coming in here at 115.978. We haven't touched the hold level down here at 111.275, but it's probably a little bit subjective because there appears to be some pretty big issues with the data feed with TradingView, just based on how big things dumped yesterday. So some exchanges may have actually hit this level, even though this chart doesn't actually look like it did. We've also got, a range trend retest due up here in that 120 area. And we've dived this range trend here, which is in that 114 area. So again, medium bullish if it closes where it is, because at least it's still inside the 5-day range. It could pop back up and retest the backside of the range trend, and that would give you a touch and potential rejection off that 114 area. It could poke through and hit the hold level, which gives you a means of getting to 115. And because it is only a single candle and it's not a fully developed range yet, it could push up higher and test these origin levels and then have a bigger dump. But I guess the thing to point out here is that this is not the kind of structure they build if they want to go up. This is the kind of structure they build if they want to keep resistance in. And the fact that they haven't potentially hit these hold levels to the downside means that you might be looking at the most bearish thing would just be it closes roughly where it is now. Anything under the anything under that 112,600 level could force an immediate rejection off the break level and then down to the hold and the trend. And yeah, there's not really too much to hold this time frame up if it falls. You've sort of got an origin level in here at 107,400. It could bounce off that, but it's a bit of a dirty one the way it's been formed. So you don't have a hold level anymore. There's not really that much that's going to save that if it goes. Chances are it would just dive straight through this trend like what you've seen previously and go hit these lower levels. So let's just hope that actually comes back up a little bit. And we've got a 53-day close. So this is another one that's pointing to that 96 area. And if we break it down and have a look at it on the daily, the candle is currently below trend. So this is probably the biggest reason why you want to see the price get back up into that 114 area before daily close, because if not, you're opening a 53-day candle on the wrong side of a support trend, and that would that makes this really realistic to go down and hit this level. So and you've just seen what can happen and how quickly it can happen. We've got liquidity down there. Why would they not take it? So it's a pretty critical close, this one. So over to SOL. So the 1 day on SOL really needs to go up as well. So it's good that it's above the break level. So we want to see it close above this 217.876 level for sure. But it's bad that it's below the trend. So yeah, you really want to see this get up. The 225, 226 sort of level is quite key because it gets you onto the top side of the downtrend. And of course, it would be very bullish if it pumps back up into that 231 area before the end of the day, in which case it's definitely going to go up to that 238. To target that 238 area, we basically need to be bouncing off a trend, and we're not going to do that if we actually close where it is now. We're going to be under the trend, and you'll be looking at a pretty good rejection, and then probably a move down to that next untested sort of levels, which are going to be between 211 and 203. So yeah, we're really looking for this close to get back up above the trend. And although I guess you could argue that it's not a hard close trend, this close, and you could go back up. Yep, that's absolutely true. But it's also a backside bounce, and a very weak one at that. So, typically the first thing that happens is you bounce off the backside of a range, which is what it's doing now. And then the next thing is that if that doesn't give you sort of parabolic continuation, which it certainly doesn't look like it is, then it would typically target the front side of the range, which is 203. So I don't know, it just looks sick and bearish, really. And coming in looking at the 5-day chart, we're closing hopefully above the 217.867 level. So if that happens, we could get a bounce and a test up of this hold level. So now the 5-day chart could always come down to this 209 level first and then go up. So if we get a really bad 1-day close and you get a quick dump off the 1-day, that will just be part and parcel of the 5-day candle traveling down to that lower hold level. So, realistically, both of these things could actually play out because one of them has a longer time frame that it can play out over. And then if we look at the 53-day, the 53-day close, as long as it's above 216.059, is actually bullish. So it would be a close above a old origin level, probably the oldest origin level that this thing actually has from all the way back in August of 2021. So what happens next? Well, as you can see with the 53-day time frame, it can fulfill all of the lower time frame downside if it needs to. Come back to the trend here at sort of 210 or anything like that, and then it could bounce off the top side or come back up to the top side and then go up. What it is doing, which is probably a little bit more of major concern, is that it's actually shifting yet again another trend for rejection up into that 252, 253 area. So we've previously not, well, when I say previously, about a week ago, we didn't really have any reason to stop. And if we got a bounce, we were just going to keep going up. Now what we're seeing is we're seeing more and more reasons on higher timeframes for rejection, back up in that 253 area. So there are a couple of timeframes, real big ones like the 18-week timeframe that could just send the price through that for weeks and weeks and weeks into a blow off top, and then come back down and basically dump into a bear market or something later. So there are possibilities for why that doesn't matter, but we should probably consider that we've got liquidity to the downside. We're bouncing off backside ranges on low time frames. We've got untested frontside holds. We're not recovering fast enough, in my opinion, and that typically means they're really welcoming for you to bring your longs in. So, I actually think it's not a bad area from a risk-reward perspective to build a long. And certainly if you're already in one and you've got a relatively low leverage or very low liquidation area, or the ability to top it up if you have to, or even just stop it out and enter lower again if things do get really bearish, then yeah, it's not a bad place to be taking along. I wouldn't be shorting here because the messages are just too mixed. Having a bearish daily but potentially closing a 2021 origin level on a 53-day timescale, it's just as likely to explode to the upside as it is to just dump again rapidly to the downside. So yeah, I would be saying and I am basically just building along, and if we go down, I'll add to it. if we keep getting resistances and invalidations, then I'll probably just close it. And based on some of those timeframes and some of those hold levels that are getting created today, if we do get a pump up in the next sort of 24 hours, I'll probably TP some of that long anyway. And just, looking at some of these key levels, like some of these holds that are up around the 240s, because I don't think, even if it does pump up initially, I think it will come back and then it will go based on the lower timeframes. So it's possible to TP at these levels, and then if the structure decides that it wants to continue up and go back up over that level and continue, then you can just re-add it in again. So you haven't really lost out on anything. Maybe $1 or $2 here or there on what you've taken out of the trade, but the chances more so that it then comes back down to the front side levels and then allows you to re-enter your position after TPing in the 240s and re-entering in the 209s. That's probably better from a reward perspective. So we'll see how it plays out. And let's have a quick look at some of these others. Just see what's going on. Oh, actually, I was just going to show you that. So this is some of the stuff that's going on with the TradingView at the moment. You've got this 3-week candle here, which is in a range trend rejection. The target was the bottom range trend. If you look at it on a 3-week time frame, it never touched the target. You look at it over here on a 1-hour time or a 4-hour time frame, it has touched the target, which is just absolutely weird. I posted where is it? This one. I posted this one several hours ago, and it had touched the entry. This particular wick had come all the way down here. Since then, the actual chart, exactly the same chart, has changed by itself, which is a bit weird, and it has now not touched the entry, so it's pretty hard to tell. We may have actually hit this 213.273 level. If we have, then we're just going to keep going up until we basically hit the topside trend up here at about 266, and then we're just going to probably come through that and hit this 286 level. This is the biggest time frame in play from a support perspective. And yeah, if you check out my X feed, you'll see a tweet where I showed exactly this chart, and this wick had touched this to the cent and then taken off to the upside, and then refreshed that chart this morning. Well, actually didn't even refresh it, just got up in the morning and looked at it. It's changed. So that's just bizarre. So I've posted both of them on X if you want to get a bit of an idea about how things have gone a little bit weird. And let's just show you. Might just be easier to redo it. This is what happened yesterday. So we have, where are we? Here we go. So this is our Trump trend, bull market trend, whatever you want to call it. I call it Trump trend because quite literally it kicked off the all-time high move. It also was the Trump dump and pump, pump and dump, or whatever it was there. I think it was a dump, a pump, a dump. And there we've had, the first time we retested this thing from the other side, we went from 217 down to 285 again. And then we got up above it. We're currently below it, which is really why you want to see this get the week back up over this 226 level. But if you actually have a look at what this did on the hourly, it was a work of art. They just dumped this candle on the hourly, opened straight below the trend, hit it, boom. And that liquidation there happened so fast that nothing kept up. Exchanges couldn't keep up. TradingView clearly has gone all glitchy and probably has a whole bunch of issues with data feeds now in this area. But that's the kind of thing that we could see if we actually get back up over this and bounce off the top side of it. So yeah, exciting times ahead. As for our other ones, SOE's actually holding up pretty well. It hasn't come back to the monthly trend yet. It hasn't come back to the range trend. if we do get that secondary stage dump in alts, then there'll probably be a good entry, and it'd be worth taking it really before the end of the month. The risk to reward would be really good in actually catching this thing down here. NA is tanking. Again, it's hard to know whether that got to that short completion of 0.5428. But it looks to me like it's going to close under the trend. So if that's 8 days, yeah, 8 days. Really, we just got to keep an eye on this thing. In a perfect scenario, it's going to go down in the next 8 days, finish that monthly short, so that takes away that pressure of the monthly short, and then go back up and then close the month over the trend. If it does that, then boom, it'll be a long. The hold level will have been tested, the bounce of the trend, that'll lead to the break or the origin. So that's going to be a potentially 100% move in this thing if the structure plays out properly. World Liberty Finance, I said yesterday, take profits when we hit that range trend. I hope people saw the video in time because, as you can see, complete round trip. But it's now inside this daily range trend. So if it closes inside here, it's probably going to bounce up to the 2249 hold level or the 2138 break level. So this is not too bad. It has hit the 20 cent or 2040 break level. It hasn't hit the 19 cent one. It hasn't hit the 18 cent one. So structurally, this is still ranging pretty okay on the daily. The thing that can reverse that is a retest of pretty much anything in this area here. So this is actually quite bullish if this closes back up over 2138, and yeah, then it's almost certainly going to do a retest of the hold level at 2249. So there might be another scalp in there. That hold level at 2249 and the backside of that trend running through there and being back under the resistance trend though means that there could well be another dump due once this gets back up into that location. So, and if it closes under that break level of 2138, then it could just dump straight off the break level and have another push down. But there might be a trade in that worth taking. ZEUS. Well, ZEUS opened under the weekly range trend. That's not good. It has to get back up above that, or it's going to really dump. The next weekly range trend is down at 5 cents roughly at the moment, and it does have a weekly break level at 10 cents. So that could become an origin. And has it lost that? Yeah, it's under that. So yeah, I would not be interested in that at this stage. It hasn't hit. So it's not like the other tokens. It hasn't hit the hold levels or the break levels to the upside. It's still under the trend. It's now under a range trend. Yeah. Next step for this thing is either to get back up and hit these levels at the top side, maybe then worth a long and a pump, or yeah, or it's just toast, pretty much. So not going to look at that. Cook. So it moved its trend. It's come from the top side, and it looks like it's probably, yeah, let's see. So that's a pretty big candle there. So this is not, doesn't really look like a weekly origin level, but there probably is an origin level in there that created that bounce. And so it might come down and actually test these levels and then have another big bounce. So that's possible. Failing that, it's got a range trend down here at about 9 cents, and it might hit that and go up from there. So I'm long on this from about 6 cents, but I think if it gets back to, I did take some profit thankfully, but if it gets back to 6 cents, I'll probably just get stopped out on that. And Hype looks bad. Surprise. Yeah, if Hype loses this weekly trend, it could get pretty nasty. So we've sort of talked about that before, but there might be a long on this, just on this $46 hold level if it dips down to that. So yeah, it's probably not a bad risk to reward to take a long position at that 46 level, and it is still holding trend at this stage. You could actually almost long it here on the assumption that it bounces off this weekly trend and goes back up, but it's not ideal. It is looking to create an origin level for rejection across here at 49.88, so that could be the end of it really if it hits that, and then it just takes a real big nosedive. So yeah, don't know, have to see how that goes. It's pretty new really. Say has been obliterated on the monthly, so it's pulled all the way back down. No hold level there anymore, so really you want to see that thing go back up. If it was to take a nosedive down to this range in the 21,218, then probably worth an entry there. That's a really good risk reward. But other than that, just want to see this get back up over that monthly trend, close over the monthly trend, retest and go, or retest the hold and go. So there's nothing really to do on this until we see how the month actually closes out, and hopefully it closes out better than this. Otherwise, it ain't going to look good. And I think that's us. Yeah. So hopefully you get something from that, whether it's education or some idea of the different levels. But as far as, is this the bottom? Not too sure. If we actually see a decent pump up in the next few hours, then this could turn pretty bullish. Things like that 53-day close on SOL could be really bullish if they want to be, closing above those high time frame origin levels. But yeah, BTC still, when you look at that one-day chart, it doesn't look like it's done a liquidity sweep. And so you really want to see that bottom side liquidity get absolutely taken out. And unfortunately, even though that 53-day close on SOL could be really bullish, the 53-day close on BTC at this point is also super bearish. So, and considering the SOL BTC chart is the way it is, if BTC does take a dump, SOL's just going to plummet. It's not going to be able to fight against it when it's in a rejection itself against BTC. So yeah, building position around here, good choice, but be ready, it could go lower, and it may well do so. All right, like, subscribe, and all that kind of stuff. We're nearly at 500 subscribers, so that's pretty cool. And yeah, catch you in the Discord and all that other stuff. Cheers, bye.